Today, the people of Israel are under attack, orchestrated by a terrorist organization, Hamas. In this moment of tragedy, I want to say to them and to the world and to terrorists everywhere that the United States stands with Israel. We will not ever fail to have their back.
Israel and Hamas at war. The death toll tops 1,100 as fighting enters a third day. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for a de-escalation. Oil surges and safe havens gain. We'll look at the implication for markets as investors now face a fresh dose of geopolitical uncertainty. And risks abound as China returns from Golden Week break. Xi Jinping will meet his U.S. senators in Beijing as Senator Chuck Schumer blasts Beijing's response to the Israel-Hamas conflict. A very good morning. Welcome to Bloomberg Brief. I'm Manus Cranny with Danny Berger in London. Danny, we are facing open-ended geopolitical risk. That is the view. And if you look at the equity market this morning, what you have is, again, a flush into dollar and into oil. But these S&P futures are down just by a tiny amount this morning. The risk is this: will the Fed have to cap what they are doing as a result of this open-ended geopolitical risk? John Arthurs this morning says Gaza won't hamper markets unless Israel hits Iran. And that is the wild card, according to Halima Croft. Oil is up 3% at this junction. We were up 5% in the past couple of hours. Halima Croft at RBC says Iran remains the big wild card. And, of course, warships are on the way closer to Israel from the United States of America. All eyes will be on the Strait of Hormuz. And, of course, we begin to tick over in our mind, what does all of this mean for Saudi, Russia, unilateral cuts? The absolute natural haven that is taking the bulk of the haven status today is the dollar, up 0.25%. It undermines pretty much all the other currencies. Sterling is down. You've got the euro under pressure. Money flows slightly into the yen. Danny, good morning. Open-ended geopolitical risk is what we need to assess in the next hour.
And at least the first blush response, Manus, is that textbook haven trade. The risk off, it's not just happening in the dollar, it's happening in treasuries. One thing that is helping to dampen volatility is the fact that it is a holiday in the U.S., so cash trading for the treasury market is closed. Still, we're getting a bid into futures. We're getting a bid into global bonds. In fact, Manus, to your point as to whether this caps the Fed, we've seen a round trip in this treasury market. We are back at the levels we were before that Friday. Too hot to handle jobs report data. Now, I also have some Israeli assets on my board. The shekel is weakening. It is at its lowest level in 7 years, down by about 2% versus the dollar. Of course, you have two things at play also because the dollar's acting as a haven currency, but that's occurring even though we did have the Bank of Israel stepping in with about $45 billion worth of support, $30 billion of that coming in the form of selling FX, the rest of that coming in the form of swap mechanics to help give liquidity to this market. Finally, Israeli stocks, they have taken a pause from the worst of the sell-off that we've seen still over the past 2 days. They're down about 6.5%. Manus, that is the worst sell-off for Israeli stocks since the beginning of this year. Well,
certainly the central bank stepping in there to the FX market is a big moment. To the Prime Minister of Israel, Danny, Benjamin Netanyahu has declared his country is at war.
Hamas started a cruel and evil war. We will win this war, but the price is too heavy to bear. This is a very difficult day for all of us.
Joining us now is our Bloomberg Istanbul Bureau Chief, Honor. And Honor, what is the potential for escalation? I quoted Halima Croft. She's talking about the risk with Iran, the conflict. What is the risk of escalation between Israel and Hamas, as well as other parts of the region, specifically Iran?
In terms of Hamas, Israeli military authorities have said that they are going to dismantle Hamas's military infrastructure in Gaza, and that's going to be an operation that's likely to have a massive ground incursion element, which means it will take a very long time, if not months. But outside of Hamas, the appetite for escalation in tensions between Israel on the one side and Iran and its proxies on the other side has been limited so far. Just yesterday, there has been some shelling, some mortar fire coming out of Hezbollah in Lebanon, in the north of Israel. But Israeli authorities also said that that shelling has been somewhat less aggressive than what they would have expected. But now, having said that, I think the single most important thing to point out at this point is that it's still day number 3 since the Gaza militants' attack against Israel on Saturday. That means it's very, very early to say that this is not going to escalate into a sort of a shadowy war between proxies of Iran on the one side and Israel on the other.
Honor, it still might be early, but we've had a variety of responses from different nations. That includes U.S. Senator Chuck Schumer being very critical to China in their response. He's in China now. CCTV says that she and Schumer will meet. Who are likely to be the peace brokers in this conflict, and how do you assess their chances of success?
Right now, all the countries, especially in the region, stand to lose a lot from a prolonged conflict and higher tensions between Israel and possibly Iran on the other hand. So they have all shown willingness to engage in dialogue, and especially countries such as Turkey, Egypt and Qatar have expressed interest in brokering some kind of dialogue between Israel and Hamas. But again, it's very early to gauge the chance of success for any of these initiatives. Even Hamas itself doesn't seem to have a full grasp of how many Israeli hostages it has, where exactly they are being held. So without that kind of clarity, it's impossible to have any of these countries to have a meaningful contribution to what might be a dialogue between the parties that might end in a cessation of hostilities.
Honor, thank you very much for that. That is Bloomberg's Honor Ant. All right, let's take a step back. On global risk, we've had this clear haven response, as Manis and I walked through. Joining us now is Kallum Pickering, Senior Economist at Berenberg. Kallum, it's one of these difficult situations. I mean, that understates it. It's this global event, this risk event, clear response in markets. But how do you take a step back and assess when there's just so much unknown at this moment?
Well, the market is presently telling you that the major economic potential concern would be oil markets. We've seen the oil price react. The playbook for an oil price shock, and I think it's a tail risk at this stage rather than a base case, but of course this is the fog of war, so let's see how things play out, would not be the same as the gas price shock, where in a world now where monetary policy is restrictive, and therefore if we were to get a serious supply-side shock in the oil market, not base case again, but a risk scenario, we would likely see a little bit on inflation, but more likely you would see it in real GDP and in unemployment. That's the thing we need to keep in mind. Whenever monetary policymakers think about inflation and these kind of shocks, it's always a trade-off between inflation and output. The last time we got inflation because monetary policy was easy. Now that monetary policy is restrictive, any supply shock would produce less output. So the recession risk is probably higher, not the inflation risk.
Kallum, good morning. And I think Javier Blas's column, and I'd encourage everybody to go and read that, he reflects, he said, look, this is not 1973. This is not when you're going to have a Middle East embargo of oil on the world. So if we take that out, we've got a 5% pop in oil this morning. What goes through my mind is this buying of treasuries that we've got, which is, again, a very classic trade, buy dollar, buy treasuries. But in many ways, Kallum, what this does is perhaps put some kind of a near-term peak in the spike in rates and the vigilantism in the bond markets? Or is that optimism on my behalf?
No, actually, I think you're absolutely right. I mean, and I would just categorically say the oil price shock at this stage is a risk scenario rather than base case, but that's the framework that one might want to think about it. In terms of what we see in the Treasury market, I must admit I was a bit surprised a couple of weeks ago that markets seemed to think that the higher rate on treasuries was, say, a bond vigilante scenario where there's a context of worry about US debt. Just keep in mind, the dollar was appreciating as treasury yields were rising, and the 3-year money market bet on the funds rate was also edging higher. So for me, that was a normal response to markets digesting what the Fed has been saying, which is higher for longer. We don't have to look very far to see what a genuine debt fear looks like. Just a year ago in the UK, bond yields rose 100 basis points, much like in the US, but sterling was down, not up, because we were shedding risk in the UK market. Instead, now we have a normal response to a monetary policy signal, not a fiscal risk.
So within that context, we've also had markets do this round trip where Friday after the hot employment data, we had a more stronger response priced in from the Fed. And now with the geopolitical uncertainty, we've backed off of all of this. Could this possibly, especially what you're saying in possible repercussions for the economy, could this cap the Fed?
I think the Fed heading into an election year with a dual mandate, with a slowing economy, will be hoping it doesn't have to raise rates any further. We have to be patient with monetary policy. A strong economy shouldn't be enough just to raise interest rates. It must be a strong economy that seems to be implying an additional inflation risk. Now that US monetary policy is tight, I think it argues for patience. In a heightened geopolitical environment, a risk environment, probably the Fed now, if it's comfortable roughly with its monetary policy, will err on the side of caution and say, well, actually, we don't need to go much further.
All right, Kallum, thank you very much for joining us this morning. Difficult conversations to be had. Kallum Pickering there of Berenberg. All right, let's get to some other top stories that are trending on the terminal this morning. Some of the things that you need to know. Hundreds of people are dead and at least another 2,000 wounded from a 6.3 magnitude earthquake and multiple aftershocks in western Afghanistan. The epicenter of the earthquake was near Herat city. It was followed by strong aftershocks, including another one measuring 6.3 half an hour later. It said, Manis, a situation we will continue to monitor.
Well, around 4,000 United Auto Worker members at Mack Trucks will strike today after rejecting a tentative agreement in the latest dispute between the union and the auto companies. The strike action against Mack Trucks, owned by Sweden's Volvo, opens a new front in the UAW's fight for better pay and conditions. Danny.
Now, the Wall Street Journal has reported that activist investor Nelson Peltz has boosted his firm's stake in Disney and plans to push for several board seats at the company, which is grappling with sea changes across its business. Peltz's Trion is now one of Disney's biggest backers after roughly quintupling its stake in the past month to more than 30 million shares. Manis.
Well, coming up this hour, we continue our coverage of the Israel-Hamas war with Nimrod Goren, Senior Fellow at the Israeli Affairs at the Middle East Institute. Plus, we catch up with Matt Maley, Chief Market Strategist at Miller Tabak, right here on Bloomberg.
Israel cannot wage a full-scale war on a nation, its people, its land, its holy sites, and expect peace in exchange.
This is Israel's 9/11. This is Israel's 9/11, and Israel will do everything to bring our sons and daughters back home.
That was the United Nations permanent representatives from Palestine and Israel speaking yesterday. Joining us now from Jerusalem is Nimrod Goren, Senior Fellow for Israeli Affairs at the Middle East Institute. The Prime Minister Netanyahu said yesterday this would be a long and difficult conflict. In terms of the global response that you've seen and heard from the US, from the UK, from France, etc., do you think that that underpins Netanyahu to escalate the response?
I think first it empowers Israelis, because what we've been experiencing over the last 2-3 days is something that we haven't experienced in the past. We knew escalations and rounds of warfare with Gaza in the past, but this has nothing to do in terms of scope and depth of damage of losses to what we suffered in the past. So the fact that the international community and key countries are standing up for Israel, not only in public statements by their leaders, but also in gestures, public gestures, that gives some sense of solidarity, of security for the people of the country as they face some difficult days.
Nimrod, I want to ask about the timing of this. Our columnist, Bloomberg Opinion columnist John Authers, writes that the U.S. is in the midst of diplomacy trying to coax Israel and Saudi Arabia into an alliance, probably in return for defense guarantees. That would be great for the U.S. and Israel and terrible for Iran, which would thereby be isolated from the Arab world. Thus, this is a moment to provoke Israel into taking on Iran and disrupt the diplomacy with the Saudis. Nimrod, is there a risk of this, that it, one, provokes Iran, and two, disrupts the diplomacy with the Saudis?
Diplomacy will continue. I think the decision taken by countries in the Middle East to more engage with Israel and to establish ties with it, formal and informal, the interests are still there. Countries who signed peace treaties with Israel back in the 70s and 90s, Egypt and Jordan, did not alter that relationship despite different difficulties along the way. Countries who normalized back 3 years ago through the Abraham Accords continued to maintain those relations and advance them, even though there was Israeli-Palestinian tensions on the ground. And once the Saudis have made, and it seems they have made, a strategic decision to gradually go towards ties with Israel, I think these incidents, these terror attacks by Hamas, which is not a group that Saudi Arabia supports, will not change the course of events. It likely will slow down things. It will take the focus from diplomacy to security, to military action, and how to restore quiet. But eventually, the course of events, I think, will continue the same that it went until now.
We just heard references there at the United Nations to 9/11. Ian Bremmer, also at Eurasia, said this is no less than Israel's 9/11, a massive intelligence and defense failure for Israel with immediate geopolitical consequences and unfathomable human tragedy for Israeli and Palestinians alike. So equating this to 9/11 event, if I then said to you, what does this mean for Netanyahu? Many people are writing about accusations of Netanyahu took his eye off the ball from a defense point of view, was too focused on politics and perhaps not on the defenses of Gaza. Domestically, what is the risk here for Netanyahu in the midst of this conflict?
The domestic consequences will likely come into play after the security situation is stabilized. Currently, the Israeli society is suffering its losses. It's unifying. It's trying to join hands to help those in need to recover from what happened. There are still fighting going on within Israeli territory in some of the kibbutzim and villages in the south. Later on, there will be an attempt to help the captives. Large number of Israelis are held by Hamas in Gaza to get the upper hand militarily-wise. But once that happens, and it will eventually happen, I think there will be a deep public discourse about why this all happened. It's not something that Israel expected. It's a failure by the government to defend its citizens. It's something that reflects a different priority by the Netanyahu government over the last year that prefer to deal with other issues than what was really important for the safety of Israelis. And it should be leading eventually to a leadership change in our country. It may take time, but I think that will be the direction.
Again, the world has responded to this, Nimrod. You have Chuck Schumer in China right now, set to meet with President Xi, according to CCTV, who has been very critical of the Chinese response, saying it didn't evoke enough sympathy. How crucial is it for Israel to have the support right now of the world's two largest economies?
The support of the U.S. is vital for Israel. It always has been, and the statement by President Biden and the announcement about the security aid package and showcasing the power of the American military in adjacent to Israel's borders. I think those all are signals of support that are important, practically and symbolically. Also the positions that are voiced in Europe and European countries, the EU, that are standing by Israel. All of that has, I think, meaning. China and Russia and their positions are different. I don't think these are countries that Israel relied on at the moment. It's also worth mentioning that in some Arab countries there are voices who acknowledge the suffering by Israelis and against what Hamas has been doing. So there's no unified position also in the Middle East. So the scope of countries that are still
Nimrod,
than we had in the past, and I think encouraging and important.
Nimrod, briefly, there are hostages in this situation. We yet to know exactly where and how many in total. What role will hostage negotiation bear in perhaps de-escalating this initial wave of conflict?
That's a really important component of this event that we are in. It's something that we didn't see in the past. In the past, Israel, for 1-2 soldiers were abducted, was doing all that it could for years. Now we are speaking about more than 100 people held in Gaza, including children and women. This is something that Israel would like to resolve fast. There are already reports today about attempts by the Qataris to try and mediate an immediate swap, at least of women. There are a lot of kids over there that also need to be brought home. So I think that would be a calculation, but it won't be something that will jeopardize the broader Israeli response. I think Israel is gearing towards a significant military response, while in parallel trying to find ways to resolve the hostage situation.
Nimrod, thank you very much for giving us your time this morning and your thoughts on this situation. Nimrod Goren, Senior Fellow for Israeli Affairs at the Middle East Institute. Danny, let's just reflect on some of the impact of day 3 of this conflict. We're looking at the shekel, of course, the dollar rising, the shekel falling. We have had intervention in size and scale from the central bank, trading at 391. Money goes into the dollar. We are seeing a program by the Bank of Israel to sell up to $30 billion in the FX market. Haven status is the dollar, cable under pressure, euro dips 0.4%, right here on Bloomberg. This is Bloomberg Brief. I'm Matt Maley in New York with Danny Berger at London HQ. Danny, let's just reflect. We touched on the shekel just before we went to break again. Considerable intervention this morning.
That's right. In total, it's a potential of about $45 billion worth of intervention from the, from the Central Bank of Israel. 30 billion of that would be in FX, and then 15 billion through swaps, Manus.
Just bear in mind, there is over $200 billion worth of reserves at the Bank of Israel. And this goes, if you go back a decade ago, this is when Stanley Fischer stepped in to stem the surge in the shekel. So they have reserves aplenty, and there is a global support in politics, security, and finance. Coming up, we continue the conversation right here with Miller Tabak.
Today, the people of Israel are under attack, orchestrated by a terrorist organization, Hamas. In this moment of tragedy, I want to say to them and to the world and to terrorists everywhere that the United States stands with Israel. We will not ever fail to have their back.
Israel and Hamas at war. The death toll tops 1,100 as fighting enters a third day. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. Oil surges and safe havens gain. We're going to look at implications for this market as investors now face a fresh dose of geopolitical uncertainty. And risk rebound as China returns from Golden Week break. Xi Jinping will meet with U.S. senators in Beijing as Senator Chuck Schumer blasts Beijing's response to the Israel-Hamas conflict. Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, it is a very clear haven bid that's coming into this market. It's not unusual for this unknown of a geopolitical event, an attack, a war, that you would have this type of pricing. In the bond market, we're getting a bid into futures. The cash market is closed today for a holiday in the U.S. That's helping to dampen volatility somewhat. But the Israeli markets, you're seeing a plentiful volatility there. The central bank, Manus, as you and I just discussed, did step in with support. Now, it didn't necessarily change the direction of the weakness in the shekel, which is now trading at its weakest level in 7 years. But as Jeffrey Yu from BNY Mellon points out, they want stability, not necessarily to change the levels at this point we're in. The Israeli stock, the Tel Aviv Stock Exchange, that weakens further at the lows for the day, down about 0.1%. Manus, that adds to yesterday's loss in the Tel Aviv Stock Exchange of about 6.5%.
Yeah, the epicenter really, Sunday trades in the Middle East, was a reflection in equity risk. This morning, we give back 0.5% on the S&P 500. Of course, it was the Goldilocks soft landing jobs number that took you up by 1.5% on Friday. We gave about 0.5% back. We have a new open-ended geopolitical risk, which will ultimately deliver a dollar underbelly flow, perhaps into U.S. stocks as a haven if there is an escalation. John Arthur's piece this morning, Gaza won't hamper markets unless Israel hits Iran, and that is the real escalation risk. Stocks give back 0.5% this morning. Crude was up 5% at one juncture in the overnight. It was a very natural disposition for the market to propel itself higher. Halima Croft at RBC say Iran remains a very big wild card and depends on how much Netanyahu blames Iran, and perhaps those warships which are on the way to local areas near Israel. What happens next? There is a risk of a flashpoint in the Strait of Hormuz. That's what people are worried about. It is not 1973 and an oil embargo from the Arab nations against the rest of the world. And the dollar is bid a very classic defensive play. The the fundamental response here is you want to own dollars. You're seeing the euro under pressure, the pound is under pressure. So those classic haven trades and lifting off the carry trades is what you're seeing at the moment. Euro dollar down 0.5%, cable off 0.4%. Danny, good morning.
Good morning to you, Manus. I really want to take what you just showed us and bring it directly to our next guest, because it is a clear haven response. And joining us now is Matt Maley, Chief Market Strategist at Miller Tabak. Matt, when you look at a market like today, when the dollar is bid, oil is bid, havens are up, a lot of these Israeli markets are down. Do you want to participate in that trade, or is this a time to take a step back and assess?
Yeah, I think it's a time to take a step back, as you say, Danny. It's just that there's so much uncertainty out there. I think a lot of people believe that this is a type of situation that it really is going to have to escalate in a significant way, especially with Iran, for this to become a big problem for oil to really take off. I mean, thankfully, crude oil had come down in the last couple of weeks. Just a week and a half ago, people were saying that $100 was a given, and now we've pulled back. So the bounce back, we're still not really very close to $100 on West Texas Intermediate, WTI. The market is actually holding up pretty well. My concern, though, is that it just adds another level of uncertainty into the marketplace. I mean, here in the U.S., the Speaker of the House is no longer in place, and we have concerns about inflation, whether really bouncing back is not a big concern, other than it's really kind of stopped falling. So, uncertainty isn't great for the stock market, and so there's still some concerns out there.
Matt, good to see you this morning. Look, I showed the dollar. Danny was showing what's happening with treasuries. Obviously, the cash market is closed this morning. What goes through my mind is this. The asset managers that I was talking to yesterday, they wanted to buy treasuries last night on the open. And interestingly, they actually wanted to buy stocks on any material drop, because in their mind, this will perhaps hamper a further acceleration by the Fed. Now, maybe that's just a zeitgeist for this when we're in this open-ended geopolitical risk angst, these 5 days of that. Would that make sense to you? Or you are more concerned about a major break to the downside in equities?
Yeah, I think, the problem we have here is that just because the Fed might, put a stop to any kind of further interest rate hikes, and, some people have already been calling for that. But we still have this situation where the Fed seems to be a long way away from cutting interest rates. And the big problem is we've had this huge divergence develop between the stock market and the bond market. I mean, we've had this great article in Bloomberg over the weekend about the historical nature of the rise in interest rates over the last 3 years. And we've certainly seen that just since the last spring, where the market, bond yields have shot up to the upside, and the stock market has only just reacted to it more recently. So I think there's got to be more movement in the stock market to normalize that divergence.
Right. Well, to that point, Matt, it would have been a really winning trade over the past 3 years to go long stocks and short TLT, short bonds. I mean, it's been a winning trade. What breaks that? What breaks that type of momentum?
Well, I don't know if there's always a specific catalyst. My concern, though, is that in every single instance, when you've seen a huge rise in interest rates without a reaction in the stock market over the last 40 years, at a time when the stock market was expensive, as it was at the top, and still is on a relative basis, the market has gone down. This divergence has been resolved with the stock market coming down to meet that decline in the TLT. The correlation between the TLT and the stock market is a very strong one. The major divergence has developed, and people have to be very cognizant of the fact that that divergence is still very, very strong. We can't have a stock market that is as highly valued as it is today, with interest rates up well above 4%.
In terms of the reflection that markets and money will make on this fairly tragic situation, how much of it will be real defensive plays now? How much money will actively be taken off? Or do you sit, hold your nerve, try your best to see what happens? Because I would put it to you that this is open-ended geopolitical risk, and perhaps geographically when we sit here, and I've just come from that region, and I can assure you that this is a very live, open-ended geopolitical risk, especially with Iran?
Well, I mean, yeah, I do think, as much as I'm concerned that the stock market has to come back down with valuation levels, we do need to, sit and, don't panic is the key situation. But I also think that, if you sit back, assess what's really going on. But this situation with Iran, if it explodes to the upside, I mean, there were, it's maybe a bad analogy, but I remember back when the pandemic was coming and everybody said, don't worry about it. These pandemics don't really become a big deal. And all of a sudden it was. And, when Ukraine, and maybe a better analogy, Ukraine and Russia, well, this is, it's not going to last that long. Well, it has. And as you say, if this continues, you have add another uncertainty in a marketplace that is again, where things are out of whack in terms of what's going on with interest rates and what's going on with the stock market. You do want to be more cautious, a lot more cautious, in my opinion.
I mean, to that point, when there's a lot of energy at stake here, again, analogous to your Ukraine example, do you want to start to look at energy stocks? Do you want to start to look at the commodities, the commodity currencies? Is that where you want to start making adjustments to prepare for the unknown?
Yeah, definitely. I mean, one of the things that I mentioned was that how crude oil had come down in the last couple of weeks, which is very good. And in fact, it was something I called for. But, thankfully, late last week, I turned more bullish on the energy stocks. I mean, obviously, I had no idea that this was going to happen. But even on a natural basis, the Saudis have been pushing very, very hard to keep energy prices elevated. We did have some negative news last week about gasoline demand here in the U.S., but I just think that with what the Saudis want to do, they're very determined to keep those oil prices higher, and the stocks have come down. I mean, we're in a correction territory in these energy stocks, down more than 10%. This is a great opportunity to come back in and add to the names that have already worked well for the last year, or actually the last couple of years.
Matt, thank you for joining us this morning, giving us your perspective. Yeah, yourself and Goldman Sachs, apparently we're not to worry about the lowest gasoline demand in 25 years. I believe you both. Matt Maley of Miller Tabak there with his views this morning in these difficult markets dealing with open-ended geopolitical risk. Oil is surging after the Hamas attack on Israel. Inflaming tensions in the Middle East. We'll discuss the ramifications right here on Bloomberg Brief this morning.
This is Bloomberg Brief. I'm Danny Berger in London. Manish Krani is in New York. Oil is gaining this morning on fears that the worst attack on Israel in decades could roil the wider Middle East, home to almost a third of global supply. Prices up 3%. Bloomberg's Will Kennedy joins us now on this. I mean, well, we can see there some of the short-term response, at least the gut punch up 5% at one point. But how do you assess both in the short-term response and what this means for the medium term?
Yeah, there has been a reaction. I think that the events are of a scale that clearly traders are worried about increased instability in the region, although it's worth pointing out, as your previous guest did, that it's still way below the highs well above 95 that we saw late last month. But the concern here, I mean, I think in the short term, the conflict in Israel itself poses no threat to oil supply. The risk is that it leads to new pressure on Iran. And specifically, we've seen a lot of extra Iranian oil in the market this year, 700,000 barrels or so of extra supply, which was one of the reasons that happened is the US was comfortable with that despite sanctions on Iranian oil. So the question that traders will be asking is there a scenario in which the US becomes more assertive of those sanctions and some of that oil stops coming to the market?
And that's the very point that Halima Croft put out in her note, and I know that we quoted that along with a number of others. That level of angst, it's a very big wild card, and Israel will escalate its long-running shadow war against Iran. Let's take that thought and build, because OPEC, ironically, have got their oil demand forecast out for 2045, and they're talking about that with the climate crisis. What goes through my mind is here we have an evolution of the oil price. We have Russia and Saudi Arabia continuing with their unilateral cuts. you know, Will, is there some kind of a debate to be had if there is a real further shock and escalation? Does that possibly change that landscape for those unilateral cuts, or is it just too early, Manus, to talk about that, and you're going to have to wait and see how this all evolves?
I think you're going to have to wait. I mean, from a Saudi perspective, they do have that million-barrel unilateral cut, and that gives them a policy tool outside the OPEC framework and outside the OPEC plus framework to manage a market. And there are scenarios where you could see they might want to use that. But I think right now, the picture hasn't fundamentally changed. Saudi Arabia wants the oil market to keep drawing inventories. It probably wants, it doesn't target prices, but I think it's fair to say that it wants prices at around $100, and that's still some way away. And that's going to be absolutely the focus of their oil strategy right now. I think we're a long way from any scenarios where they put that oil back in the market sooner than they otherwise would have done. For Saudi Arabia, the focus is on getting the price that they feel that they should be getting for their oil.
Okay.
I mean, if we do enter the scenario where there is less Iranian oil in the wider marketplace, what other levers are there? Can the U.S. still draw on its SPR? Can they be more relaxed with Venezuelan oil, for example? What can take its place?
No, ultimately, those policy levers are open if we saw a much worse scenario emerge in the Middle East, if it's developed in those sort of ways. People have focused on Venezuela as one possibility. Clearly that there are sanctions there, and there may be a little bit more oil that could come from there. And the SPR has been heavily drawn down, but it still contains an awful lot of oil, and it is designed to give the U.S. protection against disruptions outside the U.S. to oil supply. So in some of the more extreme scenarios that aren't on the table yet, but people are going to speculate about, clearly that is a lever that the U.S. has.
Okay, Will, thank you very much for coming into the studio this morning, giving us context. And just the number from OPEC is demand for oil will rise by 16% to 116 million barrels a day by 2045. Will Kennedy appraising the situation in the energy markets. A bipartisan delegation of U.S. senators arrived in China on Saturday. Among them was the Majority Leader, Chuck Schumer, criticizing Beijing's response to the Hamas's unprecedented incursion into Israel.
The ongoing events in Israel over the past few days are horrific. I urge you and the Chinese people to stand with the Israeli people and condemn these cowardly and vicious attacks. 250 young people gathered at a dance, and the Hamas terrorists took machine guns and shot them all dead. I was very disappointed, to be honest, by the Foreign Ministry statement that showed no sympathy or support for Israel during these troubled times.
Joining us now is Bloomberg's Rebecca Chung-Wilkins. Rebecca, Xi Jinping is meeting Schumer today, so are we expecting some kind of an announcement or some kind of a progress on the criticism that Schumer has made, or what do we think this meeting will deliver?
Yeah, I think absolutely. I mean, the sort of background of this and the war and conflict that's broken out between Israel and Gaza has completely changed the dynamics of this trip. Just bear in mind that going into this, traders were anticipating it, or sort of cautiously optimistic that this would help with that build momentum to reset ties between China and the US, essentially leading to more stability. And instead, we have this very clear line in the sand between, for example, where China stands with a statement that didn't mention casualties of Israeli citizens at all, and instead reiterated the need for Palestine to establish an independent state to resolve the conflict, versus those Western states in the US, also Germany, the UK, and so on, who have outrightly condemned the attacks. Instead, they clearly pledge their support for the Israeli people and for Israel itself. So a very sort of clear division here too that we've seen between China and the rest of the world. And in the background of that, for US senators visiting, will of course be China's cozy relationship with Russia and its stance on and its sort of relationship with Vladimir Putin. It's sort of hesitance to outrightly condemn the war there too, even as Beijing insists on projecting this image that it's made of itself as a sort of peacemaker and Xi Jinping as a responsible global statesman.
Rebecca, at the same time, we've had China return from the Golden Week holiday, so focusing more on the domestics here. So we also have some data on just what traveling has looked like and spending. What does it tell us about the outlook and recovery for China?
Yeah, another sort of surprise and a disappointment for investors here too, really weaker than expected data. Now, we saw a big bump up if we compare it to 2022, when China was still in that lockdown period, so travel and spending coming quite a ways up. But when we think about it in comparison to pre-pandemic, so 2019, we're really only seeing just a modest increase there. And in fact, when we look at the numbers, dig into, for example, the travel number of trips, we actually see these missing the official estimates from authorities. So 900 million trips projected by officials going into this 8-day holiday. And instead, we missed that, about 830 million instead. The spending, too, came in lower than that projected figure. And the other big sticking point remains this lukewarm response that we saw in sales. This is typically a really big time for property sales in China, and we just haven't seen that coming back. That is the big perennial question for this economy. Is the real estate market going to be able to start turning around? Are we going to start seeing a bottoming out there?
Rebecca, thank you very much for that. That is Rebecca Chung-Wilkins on the latest in China. Now, Mana, some breaking lines to bring you. We have the Nobel Prize in Economics. It is U.S. labor economist Gladia Golden. She is a professor at Harvard. She is one of the few women to win this prize in economics. Only 2 besides her have been awarded since it first was awarded in 1969. Her research, Mana, focus on inequality and the female labor force. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day. A quick check on markets. S&P 500 futures are down more than 0.5%. The rest is a clear bid to havens with both the dollar and gold higher. There's your check on crude, up 3.4%. This is Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in London alongside Manish Cranny in New York. Let's get you set up for the week, for your trading day. And it's another busy week of Fed speak. We're also going to have the release of Fed minutes. That'll happen on Wednesday, followed by the U.S. CPI report on Thursday. Now, meanwhile, in Washington, White House Republicans plan to hold a vote for a new House Speaker on Wednesday. So we might get that change by midweek. Then on Friday, we're going to have J.P. Morgan, Citigroup, Wells Fargo, and BlackRock. All of them will kick off Wall Street's earnings season. Manis, it is a busy week, but for now, it is assessing the impact of one of the biggest cross-border attacks on Israel in decades and what that means for global risk.
Yes, and we have an ongoing hostage situation. We need more clarity around that. We've seen the security rhetoric coming from the United States, from the UK, from France, all in support of Israel. Now, the consequence is a very immediate knee-jerk reaction in oil and the dollar. We've covered that, but it's good to reflect back on the oil market again. It was propelled last week. I just need to put this in context for you, Danny. Last week, we gave up $10, down 9%. You can see this spike higher this morning in the overnight. Let's just roll it over and just give you a snapshot of that. We were up 5% at one juncture, and Halima Croft makes the point that Iran is the biggest wild card in terms of the blame and the escalation. That's your risk.
Yeah, it's a similar point that John Authers makes as well, that should it escalate further, should Iran be evoked, that's where the real risk starts to kick off for these global markets. Now, some of the most liquid trading, because treasuries are closed for the cash market, is currencies. Let me show you that quickly. It's all about the dollar, Manis. It is all about that haven bid this morning.
It is indeed. The dollar's up 0.25%, and those carry trades get taken off. The shekel remains under pressure. This is Bloomberg.